A stocks and shares ISA is a type of savings account in the UK used for investing into stocks and shares, as well as other investments such as funds or bonds. ISA stands for Individual Savings Accounts, and why they're brilliant is they allow you to invest into stocks and shares in a very tax efficient way. One limitation of an ISA is how much you can put in tax-free. 2020/21, this allowance is 20k. That 20k can be used 100% for stocks and shares, or split between other ISAs such as Lifetime, Innovative Finance, or Cash ISA. That allowance is refreshed in the next tax year. Furthermore, you do not pay tax on any dividends you receive from the shares within an ISA. Outside of an ISA, you will be subject to paying capital gains tax on any money made from those stocks and shares. Let's have a look at an example. Let's say you invest 20k in 2020 and that tripled to 60k. You now want to sell the stock and move that money you've made from your stocks and shares ISA into a regular bank account. The gain you've made is the sell price minus the initial investment. So 60 minus 20k equals 40k. If you sold the stocks within a SNS ISA, you pay £0 in tax. Outside of an ISA, this would be subject to capital gains tax. How much is dependent on your income and personal allowance. There's a link in the description to gov.uk explaining this in more detail. Using the calculator on the gov.uk website, let's assume you earn 30k a year and haven't used up any of your personal allowance for the year. You would owe £3,540 in capital gains tax if you sold the stocks and shares outside of an ISA. This is why ISAs are so popular, because they're very tax efficient, especially for higher rate and additional rate taxpayers.